help me dig through this. Better than expected results, but this seems like another one of these cases where the guidance and the call, that's what people are paying more attention to. Did you change your price rating, or your price target after this report?
We're still outperform on Salesforce. It's actually still our top pick. We still see 27% upside. We see it as a Gen AI pure play, and we're starting to see that come through now with all of the product announcements, the Einstein 1 products that are coming available. And so, it's exciting to see that starting to come through for Salesforce. And, we're seeing more momentum across the industry now with, Gen AI hype and buzz turning into reality with products being launched, pricing being announced, customers trialing, and that should ramp as we go through this year and really contribute more to numbers over the next couple of years.
All right, so you're still really positive on the stock. Again, we just showed you your price target is 381, as you mentioned, about a 27%, a little bit more than that upside in the stock going forward. So I want you to help me translate this, because I was listening to the call. So what did the company mean, since you're so excited about the stock? What's a more measured buying environment? And then on the other side, demand for artificial intelligence products is heavy, but the guidance doesn't factor in much effect from that category. I mean, parse that for me. Either it's more measured or we're getting a lot of demand for AI, but how could it be both and we're not going to include the AI in the guidance?
Yeah, so Salesforce for the last 2 years, just like everyone, has seen this measured environment. And so, with the subscription model, that lag effect is continuing to kind of weigh on near-term growth. But last quarter, Mark Benioff talked about these green shoots of recovery. CEOs starting to talk about, unlocking some of that pent-up spend and planning for the next upswing. He confirmed that last night. Not only Mark, but also the CFO confirmed that last night. They're talking about a 180-degree turn in those discussions with clients. And so you did see last night, the stock was down 4 to 5% before the call. They guided for 10% plus subscription revenue growth for the next year. Consensus was at 11%. Okay. So that was what was weighing on it. But after the call, you actually saw the stock up 1% on some of those comments.
So generally, Salesforce seen as a bellwether. Just very quickly, is this a positive trend when it comes to selling AI products, when it comes to just tech spending, in your mind?
Absolutely. Okay. I think those comments about the improving environment are positive. And also, when you look at the pricing, their premium Sales Cloud SKU is about $330.
Got it.
They just announced their Einstein 1 SKU at $500. That's a 50% uplift. Okay. And obviously, they have confidence in that. So Stefan, I think that's positive for the AI trend.
Before we let you go, I do have to ask you about something that's not going positive, at least not right now. Snowflake shares down big following the announcement that CEO Frank Slootman, the other Frank in business, will be stepping down as CEO. What's your take on Salesforce? Much ado about nothing. Do you still see this company as being strong even without Slootman?
Look, we're neutral on Snowflake. I think you have 3 problems last night. One is product revenue growth deceleration continuing from 33% last quarter, 23% this year, which means you exit this next year in high teens. Datadog, Azure, AWS are all accelerating. Snowflake's decelerating, so that's not good. Secondly, you still have very deeply negative margins, almost minus 40%. And then, as you said, the CEO is leaving. So not a good combination today for Snowflake.